When making investment decisions, most people think that simply looking at a company's financial planning is enough. However, to make an accurate assessment, you need to perform a company's financial analysis. What is financial analysis? The financial analysis evaluates businesses, projects, and other finance-related transactions to determine their performance. Typically, this will involve analyzing whether an entity has enough stability or solvency for you wish it were worth investing money in. Financial analysis can be used for various purposes, such as evaluating economic trends and setting financial policies. This is done by synthesizing numbers with data to create accurate models that inform long-term plans in business activity or investment decisions involving project selection. Types of financial analysis. Fundamental analysis. Fundamental analysis is a way to determine the actual value of any company by using ratios from data within their financial statements, such as earnings per share, EPS. Using this information in addition to an analyst's review of economic and financial situations surrounding said business enterprises will allow them to arrive at intrinsic values for securities which can then be compared against one another, and articulate whether these stocks are undervalued or overpriced based on current prices. Technical analysis. Technical analysis is a powerful tool that can be used to analyze the market sentiment behind trends in prices. This technique focuses on understanding how investors feel about specific investments rather than analyzing them strictly from an asset side perspective like the fundamental analysis. Financial analysis services you can outsource. Model risk management services. Model risk management services are the practice of assessing risk in financial models. It helps organizations identify, understand and manage the risks inherent in their financial models. Financial analysts can review a model's inputs, assumptions, output, and results to identify risks. Financial analysis for banks. Financial analysis for banks is vital to understanding an organization's financial stability and risk. Financial analysis outsourcing services provide a thorough analysis of how much money you have, what your assets look like, i.e., stocks, and advice about potential investments or loans that might be beneficial based on this information. Order management services. When you need to take orders for your brand, you can outsource order management services, which have skilled professionals who will manage the process from processing and payment collection. They use an automated workflow with their order management tool to automate it as much as possible. Spend analysis services. Outsourcing spend analysis services helps businesses identify their highest spending customers, and aggregate all of the company's money towards a specific client or project into one report for easy access. Fixed asset management services. The fixed asset management services provides all the tools you need to keep your assets in check, including asset tagging, asset movement tracking, inventory verification, asset reconciliation services, and fixed asset auditing services. Fixed asset reconciliation services. Fixed asset reconciliation services provide accurate financial accountancy and maintenance of your assets at highly cost-effective prices. They enable you to do away with the tedious process while cutting down on costs. Investment analysis services. Investment analysis is a complicated process that requires thorough research and understanding of your financial goals. However, it can be done at an affordable rate by outsourcing this service to professionals trained specifically for these tasks, without sacrificing quality or value. Budget forecasting services. By outsourcing, they will help you objectively measure your success by projecting or forecasting the expenses, revenue, and their effect on profitability goals. Investor reporting services. The right investor reporting service can help you accurately report your financial and business position to various stakeholders, such as shareholders. Pricing analysis. Successful pricing strategies are essential to success. Pricing analysis can help you optimize your prices and get the most out of them, increasing margins or driving growth. Labor cost management services. Labor cost management services can help you identify and track each employee's total cost, whether part-time or full-time. They also will point out when it makes sense for your company to hire additional personnel. Other financial analysis services. Besides the above services, there are a lot of financial analysis outsourcing services that you can outsource, such as due diligence services, treasury management services, regulatory compliance services, portfolio analysis research, post-merger integration services, labor transition services, management advisory services, intuitive dashboards, key performance indicator tracking. Why outsource financial analysis services? Expertise. The most important benefit of financial analysis outsourcing is that they will know exactly what models to use. They're experienced, knowledgeable professionals who have worked with many companies before yours. They can build your unique model from scratch if none exists yet, or provide insight into how well established ones work for you to make informed decisions on where progress should be made. Technology. Financial analysis outsourcing's professionals can be a great way to save money. Technology is one area where you'll find this. They may not all need expensive enterprise-level licenses for their work because they will probably use open-source software or other affordable options available. So freelancers don't have to spend extra on unnecessary things. Business transformation. The business world is changing, and so are the reasons for outsourcing. Financial analysis outsourcing can help a company become more competitive by providing better service while also helping them stay ahead of their competition through continuous innovation that increases the value to stakeholders in all aspects, from quality assurance procedures down towards manufacturing processes themselves. Transparency and regulatory compliance. The need for enhanced transparency and regulatory compliance has led CFOs worldwide to outsource finance and accounting services. By hiring an outside party, you can ensure that your company operates within legal boundaries while achieving improved financial reporting in less time. The process to outsource financial analysis services. Financial analysis outsourcing has experience and expertise, which allows them to provide clients with the best quality services. This is possible when they leverage a streamlined, systematized process that allows for an easy transition from project start to finish. The key steps in outsourcing the financial analysis process. 1. Data collection. The first step in any process should be data collection. The more information you have, the better your chances of coming up with a sound conclusion that will lead to successful decisions and solutions for the problems. 2. Data processing. They process data to find relationships and insights that will lead you in the right direction. 3. Data interpretation. This is the process of understanding and analyzing data. Their experts have years' worth of experience in this area, allowing them to provide an accurate accounting for your company's finances. Financial analysis is the process of determining a company's financial stability and profitability. This involves reviewing a company's financial statements to assess its liquidity, solvency, efficiency, and profitability. Financial analysts also use ratios and formulas to forecast a company's future performance.